Hello, everyone. Welcome to another episode of the Small Cap Insights podcast powered by Darrow Associates. My name is Jack Greenberg. Today I am joined by Rob McGuire, founder and analyst of Granite Research. Rob, thanks for coming on. Of
Jack, thanks for having me.
course.
Hey, Jack, before we begin, I would just, well, since Granite Research is a registered California investment advisor, I just need to clarify that today's discussions for informational purposes only.
Mhm.
It's not personalized investment advice. It's not a recommendation of any kind. And the opinions are my own. They may involve some companies that hire us to provide research on their company, but nothing here should be, considered a solicitation or offer to trade.
Yep, that's correct. As Rob said, everyone do your own research. But with that being said, yeah, let's jump right on in. Rob, if you could provide some background kind of on yourself and what led you to Granite Research, that'd be great.
Sure. So I'm a 25-year Wall Street veteran. I'm an analyst salesman. I spent 19 years at KeyBank and later was Vertical Research Partners. And my niche has always been to help institutions find ideas that fit their style. And today, it's really just the same process, but in reverse. Now I'm helping companies develop institutional relationships where that style is a match with the idea. And then, I started Granite Research because, well, investors require more than the formulaic research reports that they've been receiving from the traditional sell side. And I find that many of the paid for firms have been modeled after the traditional sell side and are producing similar quality. So I just think there's a gap to provide high quality independent research that the investors require in order to make a decision on the stock.
Yeah, so I imagine that's part of what sets Granite apart. But if you could elaborate kind of on what distinguishes you guys and kind of what the research process or model looks like, I think that would be helpful.
Well, our deep dive product is similar to the quality that you might see on a mid or large cap company. This mid micro cap research, unfortunately, has become formulaic and sparse. I'm going to say 90%, but put a high percentage on the sell size research today. It's just a rehash of the quarter in the news release. Conversely, we're taking a high quality approach. We do in-depth research, objective analysis. We identify and quantify the investment catalysts, the long-term upside, the risks, and we define the idea and work through the arguments, which helps the buy side understand really what the investment's potential is. And then, we also offer a conference series, webcast, investor targeting, and outreach. And by giving the buy side what they need, we help companies develop investor engagement. And the whole point is, if you're going to spend money on paid for research, why not do it right?
Right. Yeah, I totally agree. And so what does your initial research process look like? How does it take shape?
Well, I mean, it's about modeling, determining the drivers, how they flow through to the model, defining the thesis, identifying and working through the catalysts and the issues. Um, there's a lot of rigor in there, but that's effectively the process.
Got it. Yeah, that makes sense. And so when you look across sectors, are there any kind of fundamentals or patterns that you see consistently, or is each kind of vertical you look through a different analytical lens? How do you look at that?
Which is pretty unusual to see in me too. Every company and every industry is different. You might have the same industry, but because companies fill different niches, it makes them, well, it requires a differentiated perspective.
Hmm. And so we talked a little bit about company sponsored research, but I've explored this a little bit on the podcast. But do you think that paid research kind of has the potential to create conflicts or be difficult to be objective on the analyst side? What are your opinions on that?
It's a good question. I'm going to ask you one other question relative to what?
Oftentimes these monthly fees are, analyst compensation are tied to these monthly retainers. So oftentimes they might feel pressured to give a positive review in order to maintain that fee. I think that's the stigma that comes with it sometimes.
Okay, got it. Because I think that people forget that's really what the sell side is. And I say this to people, every company pays for research. And that statement is not entirely true. You can't paint the picture all one color, but I've yet to find a buy-sider who really argues against that point. Two, paid-for research is considered less of a conflict than the traditional sell side, and it's really just the absence of the highly lucrative investment banking fees. And then the third is just simply that if it's quality research, that institutional investor is going to keep reading. If it's not, they're going to stop reading in the first 20 seconds or a couple of minutes. And so it's transparent. Um, I'll leave it at that.
So, do you typically avoid providing companies service outside of the traditional research?
Absolutely. I mean, look, I love working with an investor relations officer who has really helped management. They are the CEO and the CFO's coach, and they're helping management determine what the thesis is internally, what they want to focus on, how they're going to develop shareholder value, and then really bringing the focus back down to, so, how can we do this and move the share price and make money for investors here? Um, so we're coming in really with a completely different set of tools that complement that IRO, that investor relations officer, excuse me. Investor relations has a website, a slide deck, a news release, earnings calls. We're coming at it from the, perspective of independently spelling out and verifying investment opportunities. We have investments or estimates with valuations, and we've got, companies are just simply, unfortunately, not in a position to show an investor what their earnings could be 2 to 3 years out. Our research is also distributed through the aggregators. It's right there on the buy side's computer. And, the ideas, I was told by a portfolio manager years ago, actually here in LA by somebody managing close to $50 billion. A senior portfolio manager just said, look, if we're going to consider a company as an idea, meeting with management, it's just simply not going to be enough. We need the repetition of an idea to hit us, maybe from a couple of different angles. So by the time we've, met with management, okay, that's great. But maybe, what they really need is then some follow up with the investor relations person, possibly with management. And then, this is where the research comes into play. We give that buy-sider the opportunity to go home on a quiet moment and read through that research and really absorb what that idea is. And it's typically that's where, you get that aha moment that this is really a great idea. So, again, we could try to compete, but the reality is that I think we work very well symbiotically, for companies that are trying to get their idea in front of investors and for investors who are looking to understand ideas.
I know I understand that. And so when you look ahead, what are some of the sectors that you would like to cover or you see kind of opportunity coming from in the next 5 to 10 years?
Well, maybe I'll just talk about companies that I have under coverage. Just two thoughts here. We hear a lot about hydrogen as a green fuel, and I think that ammonia is going to play a bigger role. So ammonia burns carbon free. Ammonia is about a third of the cost of hydrogen to transport. There's a greater mass of hydrogen, believe it or not, in a liter of ammonia than there is in a liter of hydrogen. And ammonia is already one of the most ubiquitously produced chemicals on the planet. So the infrastructure is already here today, and it's decades ahead of hydrogen. The second thought is just simply that look, when Medicare Advantage carriers sneeze, the Medicare Advantage brokers catch a cold. So the Medicare Advantage carriers have had a very difficult last couple of years, and I would anticipate more consolidation among the brokers, and that's going to really unlock value.
And do you think that the small cap industry as a whole is kind of due for uh this change in cycle that a lot of professionals are talking about?
I don't think they have a choice. I mean, the trends are all leaning in this direction, Jack. You've got, the sell side's been in a secular decline for the last 25 years.
Hmm.
It used to be that, the a large part of the sell side's budget of capital markets was from the buy side, but today really it's the hedge funds, and the hedge funds are in there looking to short your stocks. So if you're looking to get, if you're looking to attract long onlys, who have long-term investment horizons, you really just can't rely on the traditional sell side any longer. Um, And then, I'd also argue that 90% of the budgets today, maybe 80%, whatever it is being funded by investment banking. So it gets back to that conflict of interest that we were talking about earlier. If you're getting paid a few $1 million for an investment banking fee, I think that, you know, look, if you're an institution, every deal has a price. You're going to go in, you're going to evaluate it with open eyes. And so you realize there's a conflict right up front. But, a lot of these companies have never done, have never gone out raised money before. They don't have the track record with Wall Street, but I find an incredible number of small and micro cap companies and mid cap companies that because of the space they're in, they just can't attract research because they don't have a banking deal or they don't have $20 million of average daily trading volume. And so I just think that you got CEOs and CFOs and investor relation officers out there are literally killing themselves trying to find research and it's just not available. So this is a very inexpensive way, I think, of getting research. You don't have to sign a capital markets, advisory agreement that you're going to get a bunch of services you don't want. This is just simply the research.
And can you speak to kind of the value that company sponsored research and just research in general kind of provides the buy side and investors?
Well, I'm going to speak to it not just from the investor, but the company, because the company investor feedback that we get is that we're a very unique resource that drives engagement between investors and companies. And our companies are telling us that they value our strong relationships with the high quality investors who we bring to the table. They're genuinely interested in their story. The companies are valuing the comprehensive diligence and research on the company and the industry. And they're valuing the research insights that drive meaningful conversations with the investors as well. And the funny thing is that when we talk to our investors, their feedback mirrors what the companies are saying. So I think it's a true testament. Look, there's a need for quality research out there. We're filling that gap.
Yeah, I had one of my guests come on who said that the companies that are willing to pay for coverage are typically the higher quality ones who are actively trying to get their story out, which I think is an interesting point. Um, but kind of final question here, is there anything that we didn't talk about today that you'd think would be good for listeners to know?
I don't know. Look, we've covered a lot. Just to the point that I made earlier, there's a lot of paid for options that are out there. We've got a track record with companies that have been choosing us over our competitors. So, quality counts with the buy side. So if you're going to spend money and get sponsored research, why not do it right?
Well, Rob, thank you very much. Appreciate you taking the time out to be on the Small Cap Insights podcast. Rob's website is granite-research.com. Please go check him out, and we'll see you on the next episode. Thank you, Rob.
Thanks, Jack. Appreciate it.